I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King of Agora Financial. Thanks so much for being here today.
Greetings, Charlotte. It's great to be with you. Thank you.
Right, and we're here at BRIC. It's early on in the year. Maybe just to start off, it's quite busy here. How are you feeling about the mood of the resource space?
It's busy here, as you noted. It's busier than it's been the last few years. People are upbeat. There's institutional money coming in. There's fund money coming in. Lots of retail investor interest. What is also really intriguing is the diversity of people in terms of age groups. It's not just a whole bunch of people whose driver's licenses date from long ago. It's younger people. It's also people from wherever, and it's like, good. You had your fun with the Bitcoin and you had your fun with the marijuana. Come on home now. Come back to the real thing, the gold, silver, hard assets. Yeah. Come on, guys. Come on in. The water's warm.
Okay, and that's what we want to see, right? A lot of people have been saying we need those more generalist investors to come back, and now we're starting to see that.
We do. We are looking at the bow wave of the generalist investor. For those who have not quite, bought a ticket on this ship, get one and get there, because this thing is moving, and you can feel it. And there are just lots of big macro reasons why it's going to happen, lots of micro reasons why it's going to happen. It's a stock picker's market, and you do have to know what to look for, what questions to ask, and you have to be willing to absorb a little bit of risk and some shock here every now and then. But I'm feeling good, and it's going to be a good year. Just
keeping going on this track right now, if you were one of these people, what would be the one question that they should be asking people at the booths that they see today? Well, there's more than one, but the top one.
There are many questions, but I think the word that you want to have in your head, it's a simple word. It's called model, M-O-D-E-L, the model. Like you've got a model ship or a model, a little toy model. People build models so that they know what something's going to look like when they build the real thing. You build model ships in the British Museum or something from the olden days. That wasn't just so that the kings and queens could play with them in the bathtub. It was so that they would know what the ship would look like. What is the geologic model? What is the business model of what you're doing? How are you going to take this brown stain on the side of a hill and turn it into something that will make me, the investor, some money? So what's your business plan? The model that you're going to follow? What's the geology? How are you going to mine it? How does this thing make money? Are there exit points for investors like us, like me, where we can sell our shares, get our money back, and make some money and move on to other things?
Okay, that's great. Now, presumably people who are coming here, these more generalist people, are coming maybe because they've heard about what's going on with gold. There's been a big run in gold since the summer, even this year over 1,600. Is that sustainable?
In general, yes. Gold leads the way. When gold is doing well, much of other mining is also going to follow. But gold is sort of the flagship, the champion. When gold popped over $1,600 an ounce a few weeks back, that was a geopolitical thing. It was the U.S. Iran war in the Middle East. So I think a lot of the dollars of that $1,600 pop, it was over 16 for a while, a day or so. That was nervousness. That was geopolitical risk in there. Where we are now is in that 1,550 range. I do think it's sustainable. Could it go down? Sure, of course it could go down from here. But we're looking at gold being about valued where it ought to be, and as events unfold, meaning debt, more debt. The U.S. is deeply in debt. Canada's deeply in debt. The EU is deeply in debt. Japan, Australia. Everybody's spending money they don't have on things they can't afford. To preserve your wealth over the haul, gold ought to be your starting point. If you've never invested in anything with the word gold in it before, other than maybe a little jewelry or a wedding ring or something like that, you start with physical gold, or you start with some basic gold ideas. But right now, I think gold royalty plays are a pretty good idea. But then that's just gold. There's a whole rest of the mining sector out there with lots of other things that terrific upside for for somebody who understands what they can do with it.
Right. So we have this underlying factor, which is debt, that's kind of driving the gold price. What about other things this year that we would see happening? It's an election year in the U.S. There's other things going on. How do they play in?
Oh, well, if you haven't noticed, if you've been in a submarine at the bottom of the sea or something, there's this impeachment thing. All of a sudden there's political risk in the U.S. that we haven't seen before. I mean, there's always politics, but this is true political risk. The election will color a lot of things. Trump obviously would like to get elected. How do you not get elected? Well, you start a war, so I don't think he's going to start any wars. You have a big economic crash. I don't see that happening. I mean, people are, the stock market is going well. A lot of things are doing well. The middle class is making increasing wages. African American, Hispanic unemployment stuff. People have jobs. There's bread on the table, so the economics is good too. I'm not going to be your political analyst, but the one person who can defeat Donald Trump in this election would be Donald Trump, and I think he knows that, and so I think he's going to throttle it back. Which, to bring it around to your question, is going to keep things going well for gold, silver, base metals, exotic metals, technology metals, the things that make your world work.
Right, and just speaking about Trump, I think it's a good time for us to do an update on rare earths, which we've been talking about for the last year or so.
Absolutely.
And we had an interesting development last week with the phase one trade deal. What is going on there?
Well, first of all, if you don't understand rare earths, they're exotic elements buried deep in the periodic table, but they make the world work. I mean, if you have one of these iPhone thingies, if you have something like that, out of 92 elements in the periodic table, out of 92 elements, 63 of them are inside this thing. None of them by accident. So you cannot do iPhones. You cannot do modern cars. You can't do battery cars. You can't do your flat screen TV. You can't do it without those rare earths. Rare earths, where do they come from? Well, most of them, 85% or so, come from China. We can't do national defense without rare earths. All the exotic electronics, all the missiles, the torpedoes, the submarines, the big drive engines that move the ships through the water. Rare earths. If we don't have them, the ships don't move. So we're going to have them. Trade deal with China de-risks the China war scenario.
Right.
It de-risks that. That's a good thing for the U.S. economy, China's economy, the world in general. Very positive thing. Interestingly, on that rare earth deal, China promised that it was going to buy certain rare earths from the United States, as in we mine things in the U.S. and ship them to China for processing. Much better to have a processing chain in the United States. And that's a whole nother Trump initiative that's been percolating and finally bubbling up to the surface of the pot in the last year or so. We have this entity called the U.S. Air Force, this other one called the U.S. Navy, this other one called the U.S. Army, that are collectively working to rebuild a rare earth supply chain in the, I'll say United States, but the United States and Canada. As long as it's sort of a North American supply chain, mines to magnets, mines to electronic metals. The people who drive they call it the military-industrial complex, whatever. They say for national security reasons, we want to have this stuff in the United States, and there are already projects in place to make that happen. I've covered them. I've written about them. I'm not going to go into gory details here, just because we have time. We don't have time. But there are projects in process right now with checks being written, money being sent, checks being cashed of people who are going to rebuild a mines to magnets program in the United States and Canada.
I guess brief answer, it is a possibility we could see this happen and break away from China a little bit.
Absolutely. I think it's a very, very high probability that we're going to see things really develop in a big way in this year, certainly, and in years to come. So if you get in on the ground floor of this thing, it'll be a nice elevator ride.
Okay, and we've been talking about technology metals used in technology. Are there any others that you're watching this year that investors may not be thinking of, but they're going to have a good 2020?
Oh, sure. Yeah. Well, we just mentioned Trump and China and trade. We've de-risked trade. What does that mean? That's good for copper. Because if China does copper, China drives the copper market. More empty cities, if you want to be cynical about it. But they're building that whole Belt and Road thing across Eurasia. I mean, from China to Turkey, from China to Serbia, from China to Poland. I mean, they're building roads, highways, power lines, pipelines, systems. All of it, lots of copper. The other thing that is a very, very underappreciated metal buried in the periodic chart is nickel. Just like you have a little nickel that you pay 5 cent piece. It's not really. It's nickel, but it's mostly copper. But that nickel is becoming a very critical commodity in the world of batteries for electric cars. Right now, probably about 90% of nickel goes for metallurgical uses. You take nickel, add it to iron, you make stainless steel. The other 5% or so is for batteries that go into high power density batteries for the electric cars that are starting to roll off in larger and larger quantities every year. As more and more electric vehicles penetrate the market, more and more of those batteries, more and more of that battery grade nickel is going to go to batteries versus metallurgy. It's driving prices, it's really solidifying the floor under prices for nickel, and it's driving a lot of people to invest in nickel. The nickel companies are doing well, companies that have, and it's not just a nickel deposit. You will usually have nickel, copper, platinum group metals like palladium, platinum, rhodium, things like that. A good nickel deposit is worth its weight in gold and more, because you got platinum group metals, you got battery nickel, you got battery copper. So in the world of mining and really in the world of investing out there, if you haven't been thinking about it, yes, there's gold. Yes, there's gold and silver. But yes, there's a whole lot of other things that are related to it chemically, physically, on the periodic chart. You can't run the world without this stuff.
Okay. That was lots of great information. We'll leave it there for now. Thank you so much.
Thank you. It's a pleasure.
Great. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Byron King of Agora Financial.